Valuation is in the eye of the beholder again. KISS, keep it simple, stupid, if you recall, is my favorite mantra. I'm articulating here what I own on the left-hand side in green. Thank you, Fastmarkets, for having Rodney and me back to speak at the lithium industry's flagship conference. RK Equity has been in business for nearly 20 years, with a particular focus the last 12 years as investors in and advisors to lithium and other battery materials companies. Please note, RK Equity is not a financial advisor, and nothing we say here should be construed as investment or financial advice, so please do your own research. Woodstock has inspired much of my lithium narration over the last few years, including my Twitter profile pic, on the left there, and my tagline, "Blue Sky in Green Fields." It was great to be back at Woodstock again in July with my family and our pandemic puppy, Teddy. I'd like to congratulate and thank my friend, sweet baby James Calloway from Ioneer with his big deal in Sibanye, providing momentum for the higher Love Lithium 3.0 narrative and an exclamation point to the transition from almost famous Lithium 2.0. Those familiar with that great movie will recall the protagonist teen journalist touring with an emerging rock band, Stillwater, which culminated in their making front-page news in Rolling Stone. So congratulations, Sibanye Stillwater, for making their second lithium investment after Calibre into Ioneer. I've turned my popular monthly equity scoreboards into quarterly shovel and stock picks videos. And as we're approaching the quarter end, I'll run through some of my latest thoughts now. September 1st, 2020, as pre-battery day speculation began, was the end of almost famous Lithium 2.0 and the beginning of Lithium 3.0. This scoreboard ranks by percentage return big cap chemical producers, spodumene producers, and emerging projects. Some highlights: in aggregate, the market cap of the entire public sector grew 5 times, from 25 billion to 125 billion. Producers were up 2 to 6 times. Developers and emerging projects were up 2 to 20 times. Among developer and emerging projects, the ASX are 20 stocks on this scoreboard, and hard rock projects are 20 projects. DLE, however, has surged the most and passed clay in aggregate and is approaching brine in aggregate. Considering that many DLE stories are private and most clay and brine projects are public, the DLE surge is even greater. The TSX, on balance, is trading at discounts to the ASX, and AIM is lame, with even greater discounts. Canada, Africa, and Europe projects are, on balance, discounted to peer projects elsewhere, and permitting risk is weighing on select USA and European stories. Conventional wisdom. The strong lithium equity thematic is now conventional wisdom. Over the last 6 weeks, 8 global investment banks have upgraded their lithium outlook for demand, pricing, and stock price targets. Is this a contrarian indicator? Time to sell? Unconventional wisdom. Geothermal is hot. As the Biden administration came to power this year, its hair-on-fire Energy Secretary Granholm has aggressively promoted green industrial policy for America to catch up to Europe and China. While in Nevada, the Detroit News quoted her touting the Salton Sea as utterly sustainable and very exciting. Just a few weeks later, GM announced an investment in the millions of dollars with Controlled Thermal, and Stellantis was rumored to be in deals with Geothermal in California and Germany. Congratulations to Vulcan Energy in Germany, which signed deals with Renault and LG Energy Solutions over the summer, which helped to support sentiment toward another $200 million equity raise at a healthy market valuation last week. General Lithium's Wei Zhang, in a June 21st expert presentation with Morgan Stanley, highlighted China's progress with new technologies for low ppm and high magnesium brines. Javier, the analyst at Morgan Stanley, who's been a big bear in the space, was feeling him out to see if these DLE technologies could actually be disruptive in terms of lowering cost or enabling great scale. Wei said no, they will be higher cost, and they are not quickly scalable, but they will nevertheless be needed. Purple Rain, Prince and the DLE Evolution. Mesmerizing, decarbonizing, normalizing, and popularizing DLE. Many of you have been reading and seeing a lot of Alex Grant. As an influencer in the space, I think no one has done more to make DLE normal. and interesting. Over the last 12 months, Vulcan and Standard Lithium have rocketed up my Mr. Market scoreboard to become two of the most highly valued emerging projects. Will Compass Minerals, who presented here and has a great, interesting project in Utah, and E3 Metals, which is at the bottom of this list, transitioning Alberta from an oil field, catch up to these Vulcan and Standard Lithium? We shall see. RK Equity is bullish DLE, and we've been an advisor to and investor in E3 Metals and Compass Minerals over the past few years. Those old enough to remember Orson Welles, he was a great pitchman for Paul Masson Wines in the 1980s. To paraphrase this advertisement, experts say DLE is a mature, complex brine with nice ESG. What they're trying to say is it tastes good. The DLE sustainability narrative is absolutely tantalizing, but it's important to recognize that every single project is unique, bespoke. Some will work, others won't. Eramet walked away from their project in Argentina after investing $150 million. As Wei Zhang of General Lithium said, they will unlikely disrupt in terms of cost, position, or scalability, but they will be needed. To paraphrase Orson Welles, they will also unlikely be fast. We will sell no brine before it's time. I made a comparison here of Smackover, Arkansas versus the Great Salt Lake in Utah. Just Compass Minerals, what I call smooth Utah jazz, is the newest DLE entrant and presented here yesterday. They've been piloting successfully a number of technologies over 18 to 24 months. I see Compass a bit like LANXESS at Smackover. They own and operate an existing business and a resource, and they may license partner with a DLE technology provider. Like Smackover, Great Salt Lake is permitted and on non-federal land. Compass Minerals has strong sustainability and ESG credentials as a longtime steward of this important American resource. Compass Minerals published a technical resource report in July which shows indicated LCE tons not far from that published by Standard Lithium for Smackover in 2019. Compass anticipates similar potential production in the low 20,000 tons per year by 2025, similar to what Standard Lithium is articulating. Turning to speedy spodumene, secure, scalable, but sustainable. So School of Rock, you see in green here, nearly 20 rock projects. There are more public hard rock projects on the scoreboard than DLE, clay, and brine combined. Pilbara and others in WA have shown how fast spodumene can ramp and the speed with which China can move to build conversion capacity, all at relatively low capital intensity. With sustained high spodumene and chemical prices, the next few years will see significant development of ex-China spodumene mines to chemicals. In Western Australia at Kwinana and Kemerton, in Korea with POSCO, and likely Quebec, Ontario, North Carolina, and Europe. Importantly, hard rock's ESG and sustainability credentials ex-China is set to improve dramatically. Pilbara is talking up the midstream potential from its partner Calyx, which hopes to produce 35% content product that could be exported to Europe. POSCO's POS-LX is a membrane electrolysis similar to what Nemaska is looking into. POSCO articulated this spring plans for an initial 43,000 tons in South Korea with aspirations to ramp to 200,000 tons. And Metsu Odutech, hydroxide from spodumene, presented here yesterday with Halmec, a proven hydroxide producer that's now planning a 20,000-ton plant, uses alkaline leach and soda leach, a sulfate-free flow sheet, which looks set to become an industry standard with Calibre-Sibanya, Critical Elements, and Piedmont choosing this more sustainable conversion technology. Albemarle, in their most recent Investor Day, highlighted that they too are looking to make their hard rock process more sustainable, not just using sulfuric acid leaching, but alkaline leach and soda ash leach. So will alkaline leach and soda ash leach soon become as popular as DLE over the next 12 months in the lithium narrative? We shall see. Tesla, the most sustainable company in the world, reiterated its focus on localized spodumene in its widely followed impact report. I did a word search for this 2020 versus 2019, and lithium was mentioned 18 times, up from 4 last year. Spodumene was mentioned twice, up from 0. There was no mention of clay, sediment, geothermal, or DLE, but sulfuric acid and hazardous chemicals were each mentioned twice as something they want to reduce. The relevant lithium text I'll read, 100% of the lithium we sourced was mined in Australia and Argentina. They said mined, they didn't mention processing. Tesla's novel in-house process for refining of U.S. lithium resources will reduce carbon emissions and sulfate byproducts. An integrated lithium strategy will enable Tesla to create a domestic U.S. lithium supply chain by sourcing spodumene raw material within the United States, thereby reducing emissions related to the transportation efforts of moving material from traditional lithium-producing countries in South America and Australia. They plan to commercialize a flow sheet that will eliminate dependence on sulfuric acid and sodium hydroxide, thus removing sulfate byproducts generated during the traditional spodumene conversion process. Again, this is the most sustainable company in the world focused on hydroxide from spodumene using new processes. On to conventional brines. SQM, incentivized by Corfo, has had massive volume growth in the last few years, but lower profitability. In Lithium 2.0, lithium was 50% of SQM's gross margin, at which point it had the same market cap as Albemarle. Now, SQM's margin is about 15 to 20%, and Albemarle's valuation is nearly twice SQM's. Supply chain shortages are creating new demand for low nickel and LFP chemistries, so SQM may very well benefit from rising carbonate prices in China. But in my opinion, unless and until SQM becomes a high-quality hydroxide supplier, likely from Mount Holland with West Farmers, I think Mr. Market could affix a permanently lower commodity multiple on their lithium earnings than for ALB's specialty chemicals earnings. M&A in Argentina, Orocobre and Galaxy. I'm a big fan of this consolidation of Lithium 1.0 stalwarts, creating a well-capitalized, multi-asset, multi-jurisdiction player. Could Allchem further consolidate Argentina through Lithium Americas, Minera XR across the pond? Could they buy Livent? What will they do in James Bay spodumene? Galaxy had previously talked about conversion in Quebec or North Carolina or even Georgia. We shall see. Again, M&A in Argentina. A Western-style bidding war has emerged between two dynamic Chinese private companies. CATL's bid is only 7% higher than Ganfeng's. Will Ganfeng match? We shall see this week. But is a DFS-level permitted project like Millennials really going to sell for just $325 million? What does this say about valuations in Argentina? When will clay have its day? Does Ganfeng's $400 million purchase of a very large, very advanced stage clay asset in North America in Bacanora reflect how strategic investors may value other clay assets in North America? We shall see. This slide lists a number of mid and large capitalized entrants into the lithium business in recent times and shows how dynamic juniors with access to capital are becoming strategic investors in their own right. Non-household names like Bangchek, Ches, Pallinghurst, Compass have all entered the lithium business, which is great. Piedmont, taking 2 pages from Ganfeng, has secured equity stakes and long-term spodumene offtake at deeply discounted valuations with Sayona, North American Lithium, and Iron Ridge Resources in Ghana, all within the last 6 or 7 months. Piedmont's January investment in Sayona is up 20 times in less than 9 months, and Sayona now has a similar market cap to Piedmont. Will big mining, big oil, big auto, big battery soon follow Sibanye-Stillwater's lead and deploy real joint venture capital into lithium? Will a BHP buy Albemarle as Rio bought Alcan a decade ago? We shall see. How does the EV battery material thematic look like from the perspective of a Jane and George battery pack investor in the USA? I've been involved with SPACs for over 15 years and wrote about California rare earth play MP Materials in July of last year. My SPAC Scoreboard now has nearly 30 consummated deals in the EV battery space broken down into 5 categories: EVs, batteries, charging, LiDAR, and raw materials. SPAC euphoria peaked in March. You can see a Goldman Sachs chart in terms of issuance there. A wheat from chaff dynamic is now underway. Most SPACs are trading 40 to 80% below their 52-week highs. Yet, relative to their IPO price of $10, about a third are up 20%, a third are down 20%, and the remainder are somewhere between 0 and down less than 20%. Just like pre-revenue lithium companies on our scoreboard, these SPACs are public venture capital. I'm personally invested in MP Materials and Freyr and Li-Cycle, which are highlighted in yellow on the scoreboard. Li-Cycle ended up raising $580 million, while Freyr, which is an RK client and making clean Nordic batteries, raised $700 million. These are no small sums, and yet both of these stocks are trading at not huge premiums to these cash levels. Freyr is at $1 billion market cap, and Li-Cycle is at $1.4 billion. The cathodes are coming in the United States and Europe. Like Tesla, its co-founder, J.B. Straubel, is focused on shortening supply chain. This graphic concisely summarizes Redwood's business thesis to address what so many in this room have been talking about for years. We've all asked, where's Umicore, BASF, Johnson Matthey, and others building cathode plants in the United States? Now, a big entrepreneur with big ambitions is tackling the midstream in a big way. $1 billion, 1 million square feet, 100 gigawatt hours by 2025, going to 500 gigawatt hours by 2030. As Emily Hirsch tweeted, it's about effing time. Straubel says the industry needs at least 4 companies with equal ambitions. It will be many, many years before Redwood achieves 100% recyclability. 50% is the best that could be hoped for in the medium term. Meanwhile, he will need a lot of virgin lithium and nickel and cobalt and graphite from new projects. Which companies in North America and Europe are best placed to supply Redwood's cathode surge? Another big deal, Amazon and Ford-backed Rivian. They're shunning the SPAC space, and they're going to go public through a proper IPO route, rumored to be in the $70 billion range. Going to raise $8 billion. Will Rivian and Lucid, which did do a SPAC and now has a $26 billion market cap, succeed before their incumbent brethren at Ford, GM, and Stellantis? We shall see. The list of fully SEC-registered lithium stocks on U.S. exchanges is growing. First there was LAC, then Piedmont, now Standard Lithium, Compass Minerals, and Sigma Lithium are now fully SEC-registered listed vehicles on U.S. exchanges. This is important because there's generally higher liquidity on U.S. exchanges, and higher liquidity typically means fuller market value. LAC has more trading liquidity than Livent. Expect more listings, especially from North American projects and managements. Ioneer, Critical Elements, E3, and others have talked about listing in the U.S. Value is in the eye of the beholder. I just did a comparison here again of Compass versus Livent. Earnings growth and quality in essential salts, minerals, and chemicals. I see a disconnect in the market. Compass Minerals had 4 times the revenue and 3 times the EBITDA than Livent on average over the last 4 years, with materially less earnings volatility. Compass Minerals pays a 4.5% dividend yield, while Livent pays nothing. CMP's assets are in safe North American jurisdictions. Livent's core asset is in Argentina. CMP trades at $2.2 billion market value, which is about half of LTHM. Compass is at 12 times EV to EBITDA, while Livent is 65 times 2021 forecasted EBITDA, an 80% discount. So will CMP begin to trade in part as a lithium stock and begin to re-rate in line with its developer and producer peers now that they have articulated a lithium strategy here today? Valuation is in the eye of the beholder again. KISS, keep it simple, stupid, if you recall, is my favorite mantra. This is my, I'm articulating here what I own on the left-hand side in green. As I telegraphed last year, undervalued public venture capital lithium should close the valuation gap with overvalued public venture capital EV SPACs. The upside lithium velocitility is great news for long-term bulls who stayed invested or averaged down. The very strong financing and M&A markets will hopefully continue to ensure that sufficient and patient capital is deployed. As we've long argued, the market needs to overfund projected demand growth, as supply will struggle to keep pace. Delays and cost overruns are the norm. I'm a value guy or a growth at a reasonable price guy. I'm not a growth at any price kind of guy. Commodity equities follow commodity prices. With such a strong lithium price backdrop, we will see more higher love in coming months and into 2022, in my opinion. But just like SPAC velocitility, many stocks look to have run ahead of themselves, achieving 5 years upside in less than 1 year. There's still great potential to earn 3, 5, or 10 times returns with junior emerging projects, in my opinion, but it's important to be selective. I've been a part of many great stories from the early stages: Western Lithium, Lithium Americas since 2009, Kidman, Piedmont, and many others. I've also missed many from early on, like Pilbara, Liontown, and Vulcan. A slew of new Lithium 4.0 plays are making their way to public markets, like Quebec Winsome Resources, which presented here at this conference, and Emily Hirsch is cooking up a brine play in Nevada. Highlighted in green are my current lithium holdings. Many are here at the conference: Compass Minerals, Frontier, Critical Elements, Piedmont, E3 Metals, Iron Ridge, Mineral Resources, European Metals, and Albemarle. I fully expect these to provide sufficient capital not only for my impending cash calls for my son's college, but perhaps they'll lay the groundwork for a future career promoting a genuine early-stage rock star. That's me and my son at Michigan, my alma mater, in the summer, back to school. And on the way back, we went to Cleveland and the Rock and Roll Hall of Fame. He's a drummer and a pianist and recently launched a new album. We took this picture outside the Rock and Roll Hall of Fame. Those know my proclivity for certain types of lithium. Long live rock. Nirvana Lithium. Please visit Rockstock channel and subscribe, download all of our videos, and if you like music, please go to Spotify. And Fuel House is my son's band. Tributes is his first EP, and tell all your friends. And with that, thank you very much for your time.